Everybody, it's Brian Shannon from alphatrends.net. Today is Friday, the 4th of February, 2022. Hope you had a good week in the markets. We did finish a little bit higher for the week, but it certainly wasn't a straight line up. There was quite a bit of volatility. Let's look at the S&P 500 to start. Of course, we made it through this prior band of support here, and that did not offer resistance. It also was the level of the year-to-date VWAP at that point, and that's why we refer to these levels as potential levels of resistance and areas of interest, because we don't know if they're going to just continue through there, and to try to sell short just because at these levels doesn't make any sense. We want to use multiple time frame analysis. Our bounce, of course, occurred from the volume weighted average price anchored to the beginning of last year, and typically they're not that important into February of the following year, but so far this year we've seen quite a number of stocks finding significance at the VWAP from the beginning of January 2021. So we'll keep that on there for a while. We are still below declining 20-day moving average and 50-day moving average, and we're stuck back below this prior band of support. So next week, if we can make it back above 453 and hold above there, perhaps that this was a shakeout. It's really a pretty confusing time for the market, and I don't really see an edge in the S&P 500 or most of these indexes right now. We've got earnings that are seeing stocks go up and down significantly. Google had a very positive response. Of course, we saw Facebook just get obliterated, and PayPal continues to bleed out here after their terrible earnings. And people have been trying to buy this stock for the last 150 points. They've been telling me, hey, buy the dip and that sort of thing. This is why you don't. Sometimes buying the dip works below a declining 20 and 50-day moving average, but the sum of the declines is always going to be greater than the sum of the rallies in a downtrend. And maybe this is the low, but if they don't scare you out, they'll typically wear you out. There's no hurry to buy stocks like this. The Nasdaq is right on its volume weighted average price from the beginning of last year, and it got stuck below this volume weighted average price year to date, along with the declining 20-day moving average as well. So just very unhealthy looking altogether. When you look at, this is what I had outlined Thursday night for subscribers to Alpha Trends as a potential bearish scenario, that we kind of come down to the volume weighted average price from last week, where we saw that gap lower, and then rally up a bit. Now if we continue to see the get stuck below the 5-day moving average and the 5-day moving average curls over, that could be something that leads to maybe the other shoe to drop in this market. So just be very careful. What I ought to really have is a volume weighted average price anchored to these peaks, as well as the near-term highs, and you can see that's where the Nasdaq stalled out today. For the S&P 500, kind of the same thing there. So let's look at the Russell 2000, and pretty much the same thing, that we kind of stalled out there. Now in this market, the Russell 2000, this is exactly what I had told subscribers about, is that you don't want to chase the breakout after a move that, like we saw, from 188 to 204, because it was extended, and that's exactly what happened. It broke beyond that, and then that was a failed breakout. From that failed move came this fast move lower, and what I had to do is just move this over here, because that's the accurate high on all these markets, and you can see that volume weighted average price is holding as resistance. So going into next week in the SPY, the Nasdaq, and the Russell 2000, that's giving us reason to say be cautious in the intermediate term. If we get stuck below this and those 5-day moving averages roll back over and we undercut the volume weighted average price from the prior low, we could see another shoe to drop. Now in the Russell 2000, of course, we know that the volume weighted average price off of the 2020 low is where we found the buyers so far. It doesn't mean it has to stay there. Again, we can go back to PayPal and look at some of these major volume weighted average price levels, and here's the volume weighted average price from the 2020 low. It didn't pause there at all, and it barely paused at the volume weighted average price from the last time that anchored VWAP from the IPO was touched. Perhaps we're still headed for the volume weighted average price from the IPO in PayPal. That is only another 13 points lower, and it's certainly possible. I'm not a buyer of these types of stocks. I don't care if they go up without me. It just doesn't make sense to fight that kind of momentum. The semiconductors, let's look at the daily time frame. Kind of the same story. We broke this big band of trading range, rather, in this prior band of support in here. This week we rallied off the volume weighted average price off of that level right up to the year to date volume weighted average price, and the conjunction of the declining 20-day moving average couldn't hold there. Now we're maybe trying to turn sideways a little bit. Again, it's confusing. I'm not going to pretend I know what's going to happen next week, so I'm going to be more focused on the action in the individual names as I typically am, and look towards these shorter term levels for levels that can give us more idea of, are the sellers going to defend this snapback high? If so, here's that volume weighted average price off the peak, and then what would happen is maybe this 5-day moving average starts to turn sideways. We get, as this type of action happens, then we come down to the volume weighted average price from the low 2 weeks ago, and then perhaps again another shoe drops from here and we go back and retest this low. It's certainly possible. I don't have a position in this one. I will be looking for the potential of one, but right now I just don't see an advantage. It's mainly shorter term trades. I don't want to be a day trader. I've been doing more day trading lately simply because the market is telling us to do that. My preferred time frame is swing trades, and there are still some in there that have been doing well, like HFC on the long side got stopped out of MAXR, not MAXR today. That one's still open as a short sale. MTZ a short sale, CAR a short sale. So there's still opportunities out there in the individual names, but you've got to be quick with them, especially on these shorts. They break down and they come back really quickly. So always take a third off quickly on weakness, and then look to lower the stops on the other ones. The financials did continue higher this week, so still an area of outperformance, relative strength. The financials, that is that they came back down and rallied up nicely. They rallied on lighter volume. Only price pays is what I will continue to say in regard to that. It's not a reason to sell the market. And they held above the rising 5-day moving average. So certainly, the financials are a much different story than the rest of this market. They're holding above the year-to-date volume weighted average price. In fact, it rallied up through that, came down, tested it, held a support, and we got a bounce. So they are better looking than the rest of the market, but they're also extended from 37 to 40, up close to 10%. Not the type of place where you want to look to make a low risk purchase. Energy names continue to power higher, and they just, name of the game in there is risk management. Don't chase them up here, but raise your stops. That's going to do it for me. It's been a long week, and I hope you have a good weekend. Thanks for tuning in.